Hey everybody, Smart Silver Stacker here. Last night I released a video about the inflation numbers from May that we got on Friday and how they were higher than expected, and on that higher than expected inflation news, markets had kind of a pan sell-off across the board, and yet gold and silver were one of the few asset classes that did not decline on that news. And they actually did drop initially when that news was released, but they wound up in the green for the day, and gold and silver miners actually had a pretty good day on Friday. Well, today that situation has certainly reversed, with just about everything selling off in a very big way across the board today, with the exception of crude oil. And right now, I think that the fundamentals are just too bullish for the energy sector for it to sell off in any kind of a meaningful way. We're not going to get saved from high gas prices by an economic recession, unfortunately, but stocks are down today, gold and silver are down today. Last time I checked, gold down a little over 2%, silver over 3%. All of the major stock indexes getting hit in a big way, notably the Russell 2000 taking one of the biggest hits, and that is the index that most represents domestic stocks, and so that is not a good sign for the US economy. Bitcoin, the biggest loser for the day, Bitcoin getting hit almost 17% on the day, down to the $23,000 level. And I mean, that is just mind-boggling when you think about the fact that Bitcoin was trading for about $65,000 per coin back in November, and today around 23,000. So, a tremendous drop in cryptocurrencies. That Celsius cryptocurrency just got halted. Looks like that's done for. Another one of these kind of Ponzi scheme crypto things that's just not going to make it through this filter, through this economic recession that we're going through. And I got a lot of comments on that video that I released last night. People telling me, well, it looks like the surge in gold and silver is going to be to the downside. And, of course, nobody can time markets perfectly. And I didn't say in that video that the price of gold and silver was going to surge on Monday, just to clarify things. But I do still think that gold and silver are going to be moving much higher, and I view this drop as a buying opportunity in both metals. Of course, this isn't financial advice. I'm not telling you what to do with your money. I'm just telling you how I view things and what I will be doing with my money moving forward. And I think it's also important to note, when you look at the price of assets back in November, like I said, Bitcoin up around 65,000, and today around 23,000. And of course, all of the major stock indexes were much higher. And then you go back and you look at the price of the metals, and in November, gold was trading somewhere in the range of 1,850 to 1,860, and today, even after this drop, it's somewhere around 1,830, I think. So not a huge correction since that time period in gold. Gold doing a pretty good job of doing what it does best at preserving purchasing power. And even silver, even though it's the more volatile of the two metals, is not down in a huge way. The spot price was around $25 in November of last year, and today it's a little over 21, so not a marked decline there. And, of course, that's the paper price. If you take a look at the price of actual physical metal, like what I'm holding here in my hand, that's still around $25, $26. So silver also doing a pretty decent job of protecting purchasing power. And of course, I'm referring to physical silver, not paper silver, not the SLV, not a futures contract. And I know I say this a lot, but it seems to be lost on a lot of people. The spot price is not the price of silver. It's just the price of a silver futures contract. If you want to look at the price of actual physical metal, you need to go look at what that is selling for at the moment. Now, why did gold and silver sell off today? Well, a lot of it has to do with a flight to safety into the US dollar, or what I should say is the perceived safety of the US dollar. And we are seeing that with the yield on the 10-year bond. That is moving up by almost 6% so far today, and it looks like it might continue moving higher. And I think that view of the dollar as the safe haven, that is what is going to have to change before we see gold and silver move up in a big way. And that day is coming. There is going to be a crisis, I believe, in the US debt markets. We might not be there quite yet. Whether or not this sell-off will continue moving forward, kind of hard to say. We have a Fed meeting coming up in just a couple of days, and there seems to be quite a bit of speculation as to what the Fed is going to do. Inflation continues to move higher, so they are continuing to make their sort of token efforts at controlling that. And it seems like some of the anxiety in markets is around this idea that maybe the Fed might raise the federal funds rate by 75 basis points, or maybe even what they would call like a nuclear option, 100 basis points. And that is so ridiculous. This idea that a 100 basis point move up in the federal funds rate is going to be this tremendous thing for markets. It's going to get inflation under control. The Fed's really going to bring out the big guns. And, an increase in the federal funds rate by 1 percentage point, that might be enough to tank markets and to crash the stock market. It's clearly enough to crash the cryptocurrency market, or even the specter of that move up is enough to do that. But it's not going to do anything to get inflation under control. In the 1970s and 1980s, 1979 to be exact, Paul Volcker had to raise the federal funds rate by almost 20% to get the inflation that they had under control. And so, these tiny moves by the Fed, people speculating whether it's going to be half of a percentage point increase or a 1 percentage point increase, none of it is going to be sufficient to get this inflation under control. And I think that is beginning to dawn on investors and on markets, and that's why we saw that rally in gold and silver on Friday. But the reality still hasn't made its way through to the majority of investors, and I think that's pretty understandable. We have a normalcy bias. We've had financial markets set up a certain way for so long now that everybody just expects stocks to continue moving up much higher. They expect the Fed to get inflation under control because, they keep saying that they will. They've been doing a good job of damage control. They've been doing a good job of controlling perceptions. And that is the only thing guiding markets at this point, is perceptions, because there is no fundamental case for the dollar to continue to strengthen. There is no fundamental case for commodities like gold and silver to be selling off, and yet that is what we are seeing. And it's because people are still addicted to dollars. They still view the dollar as the safest asset in the world. There's no fundamental case for that, but fundamentals don't really matter as long as people perceive reality as different than what it is. But it's like Ayn Rand once said, you can ignore reality, but you can't ignore the consequences of ignoring reality. And as for me, I am just viewing this decline as a buying opportunity. I think that we should all be very thankful for the decline in precious metal prices if we are stackers, because I don't know about you, but I'm not selling metals at these prices. I am still accumulating them. So a decline in the price of gold and silver doesn't bother me one bit. I just view it as an opportunity because nothing has fundamentally changed. We've still got approaching $31 trillion in national debt. We still have tremendous deficits. There's still shortages across the board. Energy is going sky high. As for me, moving into this economic disaster which is developing, I would much rather hold physical, tangible silver, physical, tangible gold than any kind of paper asset moving forward. I wouldn't be surprised if we see this economy enter into the kind of recession that we have not seen in our lifetimes. And, when that happens, who knows what's going to occur? We might see the banks confiscate deposits. We might see bail-ins. The sky's the limit. They're going to introduce the central bank digital currency likely as an answer to whatever the next financial crisis is. And when that happens, if you think they're creating a lot of currency now, just wait. And if you listen to any of the leadership from the Fed, or especially the politicians, from the administration, it is clear that they do not have any kind of an understanding of what is to blame for inflation, or if they do understand it, they are not being honest about it, and they are simply trying to obfuscate the truth. So whether it's willful deceit or just incompetence and ignorance on their part, doesn't really matter. The end game is going to be the same. The dollar is going to be printed to infinity, and the value of many assets like gold and silver, when you're pricing them in dollars, they're going to be going much, much higher. And it could be that gold and silver are one of the few assets that's actually going to be able to help get wealth over to the other side of this impending economic calamity. And I don't know what kind of a time frame this is going to play out over. This could be years in the making. I have no idea. It could be rapid and quick when it kicks off, and we could see maybe the dollar lose its status as the world reserve currency, or we could just see this kind of economic warfare and economic calamity that we've been seeing develop over the last year. We could see that grind on moving forward, and we could just see a slow depreciation in the dollar. Heck, I mean, gold and silver and stocks and crypto, maybe it'll all sell off and the dollar will strengthen in a big way before it ultimately declines. And if that's the case, I mean, I will be happy to swap out Federal Reserve notes for hard assets at these better prices myself. And I'm not going all in on metals just yet. You know, it is important to keep some paper dry, but I do think that dollar cost averaging and buying these dips is a good move. And again, of course, not financial advice. Those of you watching, do what you think is best for your individual situation. But I just want to point out that, I don't personally get rattled at all by these pullbacks in the price of metals. Again, nothing has changed fundamentally. It's just noise, and it's just based on people's perceptions and people's erroneous perceptions for that matter. And that's how I view it. So I'm going to keep stacking, and I hope that all of you will too. And even if you don't keep stacking, I hope that you're not getting shaken out by these drops. I hope you're not being a weak hand. I hope you're not selling into these dips, because I think that that would be a mistake. And I think that those of you doing that, I'm sure some of you out there watching are selling your metals at these prices, and I think that that's going to be a move you come to regret. Again, I can't tell you what to do, but that's my 2 cents. So what do you think will be the best asset to weather the coming economic storm? Will it be paper assets, or will it be hard, physical, tangible money like gold and silver bullion? Let me know what you have to say in the comments down below. Thank you all very much for watching. Don't forget to like, comment, and subscribe. I'll catch you next time. Smart Silver Stacker, out.